Hey friends. In last few years, I have read tons of finance-related books, have read books related to investments, and after reading all these books, I came on a solid conclusion, that I think, the fundamental analysis in long-term investing, called value investing, that is the best investing, to invest money and achieve long-term goals. I used to believe it well, and whereas trading on the other hand, technical analysis, reading charts, I keep myself away from all such things and I don't recommend people to go for it. But recently, a book has challenged my belief well. The name of the book is The Man Who Solved the Market. How Jim Simons Solved the Quant Revolution. I found this book very powerful, especially the Jim Simons. I found him very interesting. And I think, his perspective is worth learning, which we should learn. These days, I am also seeing people are educating themselves related to education, but on the other hand, trading is also in trend. Everyone is trying to be a trader these days. So, I decided to make a video on this topic. Let's see which one is the best thing according to me, trading or investing. I'll give you my personal opinion in the end of the video, but for now, I'll share some facts with the help of this book, about investment and trading, without getting biased, so that you can decide yourself, which one is more good. Value investing, for long-term or trading. Guys, this amazing book is about Jim Simons, who is called the world's richest mathematician. His net worth is more than 2,800 crore rupees, that too in dollars. And the most important thing is, where most of the billionaires, about whom you listen usually they own big corporations like Jeff Bezos, Elon Musk, Tata, Ambani. Or on the other hand, they are investors who invest in big companies, invest for long term and get rich. But Jim didn't choose any of these ways. He started his career by doing trading, and then he made a corporation named Renaissance Technologies, where he does mathematical and statistical analysis by using quantitative models. He does trading. You know, Jim has been the maths professor in Harvard University. He has worked as a secret agent for US. He was the first person who used computers well for trading while using the data. And he has also operated a hedge fund, named Medallion Fund. And you know the track record of Medallion Fund is the best in the history. It has given more than 62% returns every year after deducting all the fees and taxes. This fund has given more than 37% returns every year. Whereas if you see US index fund S&P 500, its average return is around 11%. In fact, you know, the track record of Simon is more than that of Warren Buffett. So does it mean that you should leave value investing and become a trader? Well, there is nothing like this. But I am going to tell you many interesting things in the video that will help you understand the perspective of both sides and will help you taking a better decision that what you should do. I am going to share 5 specific points one by one, which is very important for you to understand. The name of first concept is concept of investing and trading. If we talk about investing, it is a long-term game where you invest money in a stock for long time. Like for 10 years, 20 years, 30 years. Because here you invest money on your business. And to make a business big it take many years. It takes even October 20th 30 years to grow big. If you see the graph in long time which is visible on the screen right now, if you check it, you see, its value keeps increasing day by day. There would be corrections and crashes, but if you see in long term, the market always goes upwards. And this is a big fact. Due to which, if you invest in index funds for long term you can think that you will get good profits in long term. Maybe you see negative returns in 5 to 10 years, but if you see the graph of 20 to 30 years then you will definitely see positive graph. And here you get to see the power of compounding effect. Your money gets multiplied in long term. Which makes you very rich after a point of time. On the other hand, let's talk about trading. Trading is a short-term game. Here you buy any product like stocks, crypto, asset, options or real estate, so here the game is not about holding it for long term. Your goal is to make profit out of it as soon as possible. See, it's not that trading is a new concept. It is a very old concept that has been going on for thousands of years. And the basic principle of this concept is very simple. Which is buy low and sell high. Everyone tries to do in trading. Yes, many a times, people do short, that is a different thing. But usually, it's buy low and sell high. Here it's not that you keep investing for years. Here people sell things in a week, a day or even a minute to make profit. And here you don't care about company price, market, value, news etc. You don't have to care about even business model. People go where the volume is, to make profit. Second point is, difference between an investor and a trader. In order to understand the difference, let's take the example of people who are on top in both areas. First of all, we will see Jim Simons, who is known as the world's best trader. And then we will see Warren Buffett, who is known as the world's best investor. First, let's have a look on Jim's story, which is very interesting. You know, Jim was fond of maths since childhood. He started understanding deep concepts of maths since childhood, which most of the people don't understand. Like for example, if you have to go from point A to point B, but whenever you try to walk, you can walk up to half distance, so if you do this thought experiment, the result is no matter how much you walk, you won't be able to reach your destination. If you are walking up to half of your destination. Simon started understanding such things in childhood. That's why, at the age of 23, Simon completed his PhD in mathematics. After which he achieved very high success in the career of mathematics. He worked as a mathematics professor in Harvard University. But after a point of time, he started getting bored. He wasn't getting to see huge challenge in maths. He used to keep explaining the same things he studies, which was not challenging for him. That's why when he got a chance to join IDA, a government agency, then he joined it. There his job was to crack the spy codes of Soviet, by reading random data and analyzing it. When he joined IDA, then he performed very well. Before him, IDA was performing very bad. They weren't able to crack any spy codes of Russia. When Simon joined it, he cracked many spy codes with his friends, and found out the meaning, out of huge random data, by using mathematics. For which he was praised a lot. But due to some reasons, he was fired. After that he started teaching in a university. The thing was that Wall Street was near to this university, and Simon always had a dream of getting rich. That's why he started getting interest in stock market. All the things he learned in stock market, in secret agency, extracting data from random numbers, analyzing it, predicting the future, that what can happen and what not, he started using all the knowledge in stock market. He managed multiple hedge funds one by one. His first hedge fund was Monometrics, in which he was getting good success, and that too at that time where there were no computers. He used to pick a lot of data and used to analyze it one by one, that which company will go upwards and which not. After that, he formed multiple companies with different people. And finally when he formed a company named Renaissance. In Renaissance, he hired multiple mathematicians who has worked with him, and multiple mathematical rules that he formulated himself. By using them they started cracking the stock market. In fact, you know, multiple system that they used to use earlier are being used in AI these days. It's not that he always got success. He got to see failures multiple times. If we see in long run, he made a lot of money through trading. And especially the medallion fund he started, he gave people more than 100% returns, and it's not that he gave result for one time only, he gave people results consistently, gave for many years, due to which he is considered as the greatest trader of all time. Due to which, you can say he became a billionaire. It was Jim's story. Now let's have a look on Warren Buffett's story, which you would have heard before. Warren Buffett has been investing since he was 11. And always focus on value investing. He focuses on businesses of those companies, read their annual reports, sales, revenue, past performance, leadership, future plans. He understand them well by analyzing all things. And if he thinks that everything is good, only then he invests in that company. And after investing, he waits for multiple years of getting success. And when the company gets profitable, he doesn't sell like this. He lets the money compound, after which he keeps getting dividend from company. But yes, this whole process is long term. See, you can say there is no limit of money in trading. The more risk you are ready to take, the more reward you can get and the more loss you can make. Whereas the investors like Warren Buffett, their way can't make you rich quickly. In fact, you know, investors like Warren Buffett earned their first billion after the age of 50. And a major difference between a trader and investor is of tax and fees. Where, when an investor invests money and hold it for long term, he gets a lot of tax benefits. He has to pay the tax when he cashing out the investment, means that if a person is investing for 20 to 30 years, then he has to pay a long-term capital tax on the profit, which is usually 5 to 10%. Whereas a trader trades every day. So, First of all, he has to give 1 to 2% brokerage fee, and on the profit of every trade he pays 10 to 30% tax according to the trade. And he does it every day. So, I thought it is important to tell you. Third point is risk and reward. Once Warren Buffett was asked that what he thinks about Simon. To this, he said, "I don't know maths. And he is very smart. I am not as smart as him. I don't know trading. And trust me, if trading was something that everybody could do, then I would have done it already." Basically, Warren Buffett, who is already a value investor, he told himself, the biggest difference between a trader and investor. That not everyone can become a trader. And he is not lying. There is a proof of it. You know, those who do trading after 6 months, only 16% of them are profitable. What happens to 84% people, no one knows. You can say, trading is a proper profession, it's not a strategy which you can use and get rich. A trader does a full-time job every day where he makes profit sometimes, and sometimes, he makes loss. So guys, if I explain you there is huge risk in trading but there is reward also if you do it well, you can get it. But yes, luck is also a great factor here. Whereas there is less risk in investing. Especially in long-term investment. So, you will get rewards gradually. It can't make you billionaire overnight. If we see some other points, you get 8 to 12% average annual returns in investing, whereas in trading, you can earn up to 15% a day, which is 144% annually. But it's not that easy. Because reward always comes with risk in stock market. Selling things in profit consistently is very hard. Next point, which is very important, is fundamentals of trading and investing. What is the difference between investing and trading? You do fundamental analysis of a company in investing. Where you read annual reports of company, you get to know about owner, how good he is, how his leadership is, how the team and vision is. Every minute and big details about the company so that you can know well, how the business is working. When you research all these things, you come to know that the fundamentals of company on which a good business can be built are strong or not, and how good returns it has given in past. On the basis of this, you can think how much returns it will give. People invest for long term by doing fundamental analysis. Whereas the focus isn't much on fundamentals in trading. The focus is on technical analysis. Here you pick any company, no matter what its name is, no matter who the owner is, how the leadership is, no matter how much money it makes, you just focus on some things like candle charts, you study them deeply, follow market news and predict that whether the stock will go upwards or downwards, depending on the graphs. If you guessed right, there will be profit, otherwise there will be loss. Here, the focus isn't much on the fundamentals of the company. Now, this things gets very tricky sometimes. I understand that technical analysis would work, but the problem is, people start using their intuitions. I think, I should do this. And many a times, they makes guess and do trading in which there are 50% chances of being right and wrong. Maybe, the experts could crack it, but maximum people book losses here. That's why it is very important for you to understand. Comment down, what your opinion is about this. Now, the last question, what's best for you? Whatever I am saying in the video, I am trying to give you unbiased opinion without giving my opinions. What you should choose out of both, I want you to ask questions yourself. First of all, what your end goal is. How much money do you want to make and in what time? Next, how is your financial situation? And how much risk can you take now? How focused and disciplined are you in stock market? How much time are you ready to dedicate? If you answer all these questions, you will come to know what you should do. See, I understand a simple thing. And I want to explain you, investing and trading are connected, but both of them are very different things. Both of them are related to the stock market. But one thing you can do with less risk and in less time, whereas if you do trading, see it as a full-time job, which is a game of high risk and high reward. To end this video, I just want to give my personal opinion. A great lesson I learned in my life: whenever a person runs behind making money quickly, he loses money most of the time. If I talk about trading, Simon was a mathematician who was using big computers to predict what will happen and what not. And at the end, if you see, he didn't make billions of money from trading only, he made his own hedge fund, he started his own companies. And after starting those companies, he got so rich. As an individual, if you see my personal opinion is very strong related to this. I think if you are thinking that you will make a lot of money from trading, and will get rich, I think it is very rich and facts are telling all such things. Whereas if you become a long-term investor, that is much better, and it has been told in book named The Millionaire Fastlane. If you want to get rich quickly, then this is not a right way that you invest your money and wait for 30 to 40 years the money will increase. This is true, but it can't make you rich quickly. You should do a business inside. Would suggest you to become a social media creator. If you do this, you can make a lot of money, like I am making videos. You also start making videos. All these things are very interesting. You can make a lot of money from it. And then start investing that money for long term. I think this is better strategy. It is one of the best strategy which I am using myself, and I think you should also use it. Whereas talking about trading, it is very risky game predicting the future. Even smartest people can't predict what the future would be. Yes, AI and all these things are coming. AI and all these things have limitations. I think trading is a very risky game. I think maximum people should avoid it. I want you to tell your opinions through comments. That what you like more, investing or trading. And if you like trading more, then why? If there are some good reasons, then please give. If you want to keep learning such things for free, want to keep learning bookish things for free, then subscribe the channel and press the bell icon. Every week, I will keep bringing such amazing bookish things for you. So that you keep learning and growing. That's it for now. Like this video and show your support. Tell in comments what you like more, investing or trading. Share this video with all the people who do investing or trading so that we can get to see their strong opinions. That's it for now. Thanks for watching.